Prices are going up, but how fast? Stay tuned to this week's episode of Prime Property TV. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Property TV. So glad you could join us here. What you see behind me is an almost completed set in the new house. I had some last minute changes and there have been some delay because of it, so bear with me. But the good news is I got the master of videography, the fiance, behind the camera once again. Say hi.
Hi everyone.
In today's episode, I'm going to show you how the first month of 2019 did, which is January. We just got the stats out last week and they are exactly what I expected them to be and what I said they would be. Very slight increase in price and very slight increase in the number of transactions. Expect this throughout 2019 unless something big and drastic changes, such as the mortgage rules that are supposed to come down in April according to the grapevine. As a whole, GTA is up 1%. Yeah, literally 1% from last year in January 2019. Woohoo! And sales are up a whole 22 transactions, like 22 of them. That's less than 1%. That's right, that is what we call stable. There really is nothing to talk about here, no crazy numbers, no outrageous stats, nothing out of the ordinary. This is what the media would call a slow news day. No slants to put on anything. Like I always talk about an average, or people always talk about an average, everything all encompassing, but we never look at the specific segments of the market outside of me. So I want to take this opportunity to show you exactly what I'm talking about when it comes to market segmentation, specifically in the Toronto real estate market. Credit to my mentor, Richard Robbins, who created these slides I'm about to use. Now let's look at the sales and active listings in January in the last 5 years. Here's a chart of it, I'm going to blow it up, I'll show it with my face. On the left hand side, here are numbers of sales in each January in the respective year. You'll see that we're doing fairly okay. The world is not falling apart, as everyone is saying. You'll also see that the massive amount of sales in 2017, that was a crazy no showing bully offer sold for over 400,000 in a few days. Those days are long gone. 2018 post the stress test, now we have 2019, it's all about the same. No real biggie. On the other side, the right hand side, you have new listings. We have a normal amount of listings relative to last year. And again, nothing to talk about here, nothing crazy. A slow news day. What I'm going to show you next is the months of inventory. This is basically the active listings or the new listings divided by the number of sales, or in layman's term, if there were no new listings, how many months would it take before we run out of listings? A balanced market is anywhere between 4 and 6. The lower the number, the stronger the seller's market. If we're below 4, the higher the number over 6, the stronger the buyer's market. And look guys, we're at 3. Exactly where we were last year. Ding, 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 slow news day. On a side note, have a look at 2017 when things were completely out of hand. We had less than 1 month of inventory. What a year that was, crazy. So of all of this is a huge setup to the photo I'm about to show you in this chart. It's exactly what I've been preaching about when it comes to different segments of the market behaving completely different. There is no blanket statement for the entire market anymore. Are you guys ready? Here it is. This is a complete breakdown of how the market looks from each segment, including detaches, semis, towns, condos, plus a separation of the 416 and the 905. Look at the long bar at the top, which is for detaches. This totally draws my attention, and it should draw yours too, because it's 3.9 and 4.2 months of inventory in the 416 and 905 respectively. Boom. That right there is over the normal of the 3 months of inventory in all of GTA. The sale prices are all over what the average Torontonian can pay, and that's why there's no rush to buy. No people are dropping their prices because Toronto's a good market. Hence, they are sitting around on the market. That FY is what we call the balanced market, where the buyer has many options. Well, this is relatively speaking in Toronto and what we're accustomed to. Now look at the lowest months of inventory. These are the semis in the 416 and the 905. Again, all price driven. People want to own real estate. The availability of credit is just not what it is used to, and that's what's holding down the real estate market, i.e. stress tests. The average Torontonian can afford about 800,000, which is what an average semi would cost in the GTA. Exactly why the months of inventory is so low, because there is still offer dates on these type of properties. Same thing for towns and condos. All sub $800,000 product are moving quite quickly. The number of freehold properties sitting on the market around 4 months of inventory is the only properties that are on average, over the average months of inventory of 3, because there are a lot of them. It's weighing down the average of the entire market. This is proof, guys, that not all properties are created equal, and in times like this is when you need to make a plan, especially if it's your next investment move, because you better call a realtor who knows their stuff, not your cousin's uncle's realtor. In these markets, there are still opportunities to be had, specifically cash flowing properties. If that's something you're looking for, our team sends out guaranteed cash flow positive properties on a first come, first served basis. I'll leave a link in the description below if you want to stay up to date on this. Guys, ultimately, we're going to see a slow increase in prices and transactions unless something drastic happens. If the stress test gets changed from 2% to 1%, we see a 10% bump in purchasing power by everybody. That sub $800,000 market could be sub $900,000, and that may set the new entry product. Only time will tell. Until next time, guys, happy real estate.